Well, clearly Coinbase is asking for more clarity from the regulators about a product that they wanted to launch this summer. They announced it back in April, and the SEC has not given clarity around why they don't want them to launch this product. And if Coinbase, according to their CEO, were to ultimately launch it, the SEC has indicated that they would sue them. So that's kind of the high picture situation, but it really boils down to what they're saying is a lack of regulatory clarity.
So what is the product that Coinbase wants to launch? In other words, if I have X $1,000 worth of a cryptocurrency in my account at Coinbase, I could lend that money, which it is, out to someone else who is qualified and collect interest on it the way I might lend securities?
You would basically transfer your dollars into USDC coin or US dollar coin, which is a stable coin that is offered by the Center Consortium, which is led by Coinbase and Circle. And so it's part of what I'm hearing from previous regulators, someone who used to work at the SEC, is that this stable coin in particular, because of the backing, could in some respects resemble a security. And so that's what could be happening here. But the SEC will not really give any light or shed any light on why they think the product is a security, and then the coin, which you can ascertain yield on, is potentially a security, and really not giving much for Coinbase to work with.
So the issue, Frank, is that you think USDC itself could qualify as a security?
I don't personally think that, but there are certainly regulators whom I've talked to, previous folks who've worked at the SEC, who think because of the makeup of this cryptocurrency, which is a stable coin, which basically has cash reserves, but also corporate bonds and municipal bonds and other sorts of treasuries.
Right.
Many people think that that makeup in construction resembles that of a market mutual fund. And therein lies part of the issue, but also the lend product itself, because you're sort of lending out a security and then ascertaining a yield on a security also is problematic.
Yeah. Let me ask you, Frank, then, what you think this means for the future of DeFi.
That's probably the most important question, right? Because when I think about this news and when my colleagues kind of look at this, we think 4% yield, which isn't a lot of risk considering, there are not only double-digit yields, but, you can get 100% or more, right, from dabbling with some of these different DeFi protocols. So the fact that they're going after what to many of us in the crypto space view as a not so risky product definitely sends an indication that they're going to be, looking to make an example out of someone big and then maybe going after some of these more smaller operations.
So let me see if I am correct here, because this gets dense in a hurry. The moment at which the original cryptocurrency is transformed into that USDC, that US dollar coin, which is a synthetic version, let's say, of the original of the dollar and of the original crypto asset, you're making a synthetic version, then that is the point at which the SEC would presumably say that it has become a security. So my question is, am I understanding that correctly, number one? And number two, is this a race between the SEC, which would love to declare something a security so that they can then be the primary regulator of it, versus the CFTC, which might be more interested in calling the crypto a commodity to be regulated, or something under the Office of the Comptroller of the Currency to regulate? Yeah.
Mr. Armstrong makes that point that you have this tug of war between the regulators, and that in some respects the SEC is kind of overstepping its boundary. USDC very well may not be a security, but the problem is not whether or not it is or not. It's that the SEC is not telling Coinbase or sharing exactly why they think this product is problematic. Mm-hmm. Yeah, and they've tried to talk with them, and apparently they won't meet with them or explain to them why they view this as problematic.